Good afternoon, everybody.
Good afternoon.
There's still people at the back. Should we wait for them? No need, huh? Okay. I think these are exciting and uncertain times. Uncertain times are always exciting because it can go either way. And I think these are the times where decisions made with a big impact on your returns, on your portfolio, on your life, on your future, everything, right? So let's go to market outlook that everybody's looking for. Even before I was sitting down, there are a lot of questions being asked and concerns. There will always be concerns. The day when you have no more concerns is the day when you sell off your portfolio, having cash, quit your job, retire on the beach somewhere. That will be the day you have no concerns. Until then, we have concerns every day. Agree? Yes. Yeah, I wish I was at Tanjung Jara with you guys. So relaxing. This is what I call growing pains. Now, what is growing? Growing means when you're young, when you're growing up, your joints are pain because you're stretching, right? Your body goes through all sorts of shapes, sizes. I'm sure your children does that. At one spurt, they'll put on weight, put on sideways, then they stop, then they'll go taller, then they stop, then they go wider, then go taller. So, hello. Okay. So these are growing pains that what we call countries in emerging Asia are going through. Let's take a big step. Let's start. What led us here? The last 4 years have been a party for Asia. Asia could do no wrong, right? It's always the Europeans are getting all their acts all screwed up. That's how we got ours screwed up 12 years ago, 14 years ago. Now it's the US turn. We laugh at them the last 4 years. They repeat the same mistakes we made 14 years ago. 16 years ago. Wow, so long already.
Years have flown.
Wow, the years have flown. So what that says is when they screwed up, when the European economy screwed up, investment money just exited Europe, exited the US, and came to this part of the world. So we got money not because we were great. We got money because those guys were bad. Alright? Now it's an important distinction. We got the money flows to Asia because on a relative scale, we were the best of the lot. Right? But we were good, we were also best because those guys were nowhere. But now, 4 or 5 years, those guys have started recovering. So all this money has what we call unintended consequences. You all know the term, right? Unintended consequence. So with rates low, with money coming in, financing of deficits by the government was very easy. So much flow of money comes in to the point where they were thinking of capital control to stop money from coming in, right? Make it difficult for foreigners to invest in equities and bonds in Asia, putting taxes on foreigners. If you want to invest in, say, a Thai bond or Indonesian bond, your coupons are taxed by the government. Even before, if you have an 8% coupon, even before it's paid to you, 2% go to the government first. So it makes your returns lower. But this is not people like this. So policy rates, so this is the policy rate now, but what the central banks are saying, how they are reacting is this should be the actual rate from the action. So our rates are going to go up. Okay? Those of you who have mortgages, be prepared, rates are going to go up. It's a question of when, not if. When only. 6 months, 9 months, when. So the financing of these debts has been easy because too much money came in. So the foreign reserves have been going up, 150, 160 billion US dollars. Each of the countries has a lot of foreign reserves. China has 1 trillion, 1.3 trillion. So much money, you don't know what to do with it. So it had the unintended consequence of asset prices moving, properties. Now we also feel the pain here in Malaysia. Luckily not in Singapore. You all know, right? Singapore, 2,000 square feet, 2,000 Sing dollars per square feet. Not the most expensive, but most expensive 5,000 Sing dollars per square feet. Singapore is more expensive than Hong Kong now. Right? The intended consequence, even Australia, so many people invested in Australian properties, including some of you, don't need to put up your hands. Aussie dollar is so strong, Australians are sending their children to UK to study because it's no longer cheap in Australia. Okay? Unintended consequences, because Australia had a mining boom. Chinese money coming in so much. So the credit boom. Now, where did all the credit go? Banks weren't lending to businesses. Banks were not lending to governments. Banks were lending to mortgages, personal financing. Right? 20 years ago, what was the loan limit that you got for your mortgage? 55 years, right? Maturity when you retire. Now it's a 70 or 80. Or more frighteningly, some loans are being created out, can be serviced by your children. 100-year loan, 50-year loan, 70-year loan, it's like a bond. So that's how the banks lend money, because there's so much money and they have to meet targets. They have to meet loan targets. He has to meet sales target. I have to meet performance target. Everybody's going to meet targets. Right? So bankers lend money easy. Just lend to property. All countries, credit to GDP ratios all went up. Which means that as a percentage of the country, the amount in loans went up. I'm sure you all heard all these statistics. The total debt to GDP ratio or personal debt to GDP ratio in all countries in Malaysia is very high. 83%, very high. And that's only by individuals, include the government debt, the corporate debt is like 200%. Very high, which means that if you're earning 100,000 or 200,000 per annum, your debt is 400,000. Technically, you can service, right, as long as you have a job. Technically, the government can service, right? But when things start to go back, you can see a lot of people want to panic at the same time. Now, this was the sell down in Indonesia and India in the bonds. Bonds went up 340 basis points, which means that it dropped like 20%. The price of Indonesian bonds dropped 20% on the bond price, and on currency it dropped 10%, which means all in all you're dropping like 35%. Suddenly bonds are more volatile than equities.
Yeah.
Welcome to the new world. I think I said last year before that a lot of the returns that bond investors are coming to Asia is generated not from the coupons, not from the price, but from the FX, from trading in foreign exchange. So it has become so bad that bond funds are actually currency funds, masquerading as bond funds. Because if you can imagine, if you are investing in Japanese government bonds the last 2 years you have made 20% return in US dollar terms. But the coupon is only less than 1%. So where the rest come from? FX. So a bond fund is actually an FX fund if you invest in the global bond fund. So be very careful. Okay? They're not like a Malaysian bond funds. So India has its own problems too. India is worse. So this is the sell-off when foreigners want to got out the last few months. The impact on selling, on the bond prices, and on currencies. And all currencies went down, including the ringgit. How volatile is it? Last week the ringgit was what, 315, 316? Today is 325. You make more money trading FX than trading stock.
It's a bigger market.
Yeah, typical market. So this is sign of stress, also sign of growing up. Why are the foreigners selling? What is the foreigners' excuse for selling? This is what we call the worst place to be. Countries with high current account to GDP deficits, which means you are spending more than you are earning. Very Malaysian thing, right?
No, we're fine.
I mean, it's an individual.
Yeah.
And countries which have very high loan, domestic credit growth, which means your country is in a deficit, your country is not generating enough, plus your citizens are borrowing a lot. So, when push comes to shove, when the foreigners take the money out, this will be the countries that get hit the worst. And if you can recall the headlines, a lot of the countries you've seen, Brazil, Thailand, India, Indonesia, Egypt. Well, Turkey and Egypt there for different reasons for Arab Spring, but it also shows problems. This is not where you want to be, most vulnerable. Most, you give foreigners an excuse to sell out. But you know what? All these problems have been known for the last 2 years. These are not new things. Governments don't change the current account forecast, or things doesn't move like stock market. It moves slowly. So these countries has been here for some time. Thailand because of the rice subsidy policy, right? And India has been here because the government. Actually, there's no government because the government can't work, right? Everybody wants to say their piece, but nobody wants to run the country. Everybody wants to be a critic. But this gives an excuse. When the money goes out, I'll sell out this part of the portfolio. These are what I call my small cap part of my portfolio, my high risk part of the portfolio. Went up a lot, it's going to come down a lot. Okay. Now we are here. Are we safe? Let me show you afterwards. So let's talk about India a bit. Why did India get to where it did? Was it something overnight? No. You look at the current account deficit. The deficit started in 2009, and it took 5 consecutive years where they spent more and more than they were earning. So now all the debt collectors are outside your door. All the alongs are outside your door. I want my money. Government debt is not bad, but external debt, look at this. Commercial borrowing has shot up by companies borrowing in US dollars or euros because they thought it was cheap. India will grow. The US dollar, nobody wants a US dollar. Guess what now? So India is also experiencing our Asian financial crisis. Okay? Now the rupee is what? All-time low, 67, almost 70. A lot of people thought it was cheap and go in at 50. It went to 55. Even cheaper, they bought more. It went to 60. They bought some more. It went to 65, they stopped buying. Okay. So all I'm saying is problems with the government addressing current account and fiscal deficits are not something overnight. You can see here, it took 5 years to get to position. And the rupee is basically the key. If your currency is not stable, no business work. Nobody can do business. This I remember 97, 98. The ringgit was trading, what, 380, 450. That's right. Yeah. CU5, CU7. 380, 450, that's your entire margin of the company. Might as well don't do business. That's it. Wait. So when economic activity slows, countries in the worst position. Right? So, and now you're looking at import cover because of this is how we track how another factor how we track how healthy a country is. How many months of imports can your country sustain with the reserves if you have no more money? From a high of about 15 months, it has dropped to 8 months. And because of the FX, it's dropping even faster. So the country freezes. The country will need enough money to sustain for 5 more months before it actually freezes up. Okay.
What happens then?
What happens then? That's a very theoretical question. Zimbabwe may be one example, but it's one extreme. What happens then? Then the credit will just freeze up. Nobody will lend you credit.
Rescue
Right.
India.
Who rescue India?
IMF.
IMF?
Yes.
Well, India used to be a darling. Remember this term brick?
Yeah.
Now it's broken.
Very nice.
So, and a lot of this is because of the currency volatility, right? Especially when you trade and you import in other currencies, you will use your own local currency to repay. I'm sure you're feeling it now. The ringgit is weaker. You still got to buy your imported stuff. Ladies got to buy one handbag less a year. Expensive, huh?
Always important.
But to down trade, you're not buying my Hermes, so I buy a Balenciaga. Cannot buy Balenciaga, I buy LV. Right? So, currency. Indonesia is also the same thing. Reserves coming off because the government is supporting the currency. Now the rupiah went almost to 12,000. That's almost where it was in 97, 98. But conditions there now are much better. Would you agree?
Yes.
Right? And the debt to GDP ratio for the country is actually 27% compared to Malaysia. It's actually very healthy. But what is triggering the selling? Just like in the previous slide, Indonesia is here. Current account to GDP, negative. Okay. And this is giving an excuse for the foreigners to sell. Now, when the drop in the rupiah, we all be blamed on the foreigners. No. Foreign reserves drop about 20 billion. I can only account for about 5 or 6 billion because of portfolio managers. The rest, I think, are all the locals taking money, we move out to Singapore, move out to Hong Kong,
Maybe Singapore.
you know. Yeah. The usual, and it's always good, oh, blame the foreigners.
The foreigners in Singapore.
And the foreigners in Singapore.
Are there any bright spots for Indonesia?
I would think that this gives opportunity. Now, the first question you're going to ask in any investment is the company going to go down? You ask yourself, is the country going to go down? No. So to me, is exciting times buying opportunity. Indonesia is going for a 40% discount.
Yeah, true. So, goodbye.
Right?
Goodbye.
Goodbye or goodbye? If it's not goodbye, it's a
One or two is
goodbye.
correct.
You will be goodbye.
BUI. So I think it's a great opportunity. Will the rupiah can go down some more? It may, I don't know, but I'm doing a 40% discount.
Very cheap.
Now, for those of you who want to buy right at the bottom, imagine this, you are seeing a pavilion, a shop, going for a cheap sale, 20% off. Next week you went, it's 30%. Still more people, but still a lot of stock. You're thinking, next week I go, maybe 40%. By the time you go there, if it's 40%,
No stop.
no stock or whatever's left you don't want to buy,
Yeah.
right? So at what point do you buy? You can never catch the bottom.
Correct.
If you can catch the bottom, I want to hire you my company. You can always catch the bottom, right?
Cost down.
So what do? You do every dollar cost averaging, right?
Cost down.
You buy a bit more, a bit more, a bit more, because you don't know where the bottom is.
Correct.
But you know you're 40% cheaper.
Cheap, cheap, very cheap.
Cheap sale already. And the You don't buy, of course, you don't buy all the small companies. You don't buy your Bumi Resource. You buy your Astra, which is the equivalent of Sime Darby here, right? You buy all these companies. You buy Matahari, which is the biggest department store in Indonesia. You buy all these companies. Boring companies. Now, boring companies
Make money.
make money. Look at Nestle. Look at British American Tobacco. Boring, right? But what's the price of Nestle now?
60.
60. It was expensive when it was 20. Now it's 60. Is it going to go higher? I don't know.
No one.
But it's expensive already. Remember, cheap things don't come good. Good things don't come cheap.
Yeah. True.
Cheap thing no good thing is cheap.
Yeah.
So, I think Indonesia is a buying opportunity. For those of you who want to go and buy your tea furniture in Indonesia now, fly to Bali and negotiate in rupiah, not in US dollars. So, Thailand, similarly, like I said, is under pressure because of the rice subsidy policy, and the unintended consequence of the policy is that now the rubber farmers are saying, hey, what about us? They're blocking roads in the south of Thailand. And the rice farmers are saying, you've been supporting us for 3 years, good, don't stop. You stop, I'm going to vote you up. Now she's a problem. There's too much rice, I think you're right, too much rice, and the shelf life is coming off. Anybody want to buy 2-year-old Thai jasmine rice? No. So where's it going to go? You can't dump it in the market, nobody will buy it. So you write off.
Can't you export?
Their cost is more expensive than the market price. So every time they sell, they lose money. Remember Malaysia tried to corner the tin market 30 years ago? Yeah, same thing. Your stock cost is 25% higher than market price. Every sale is like a for sale. Every sale you do is painful. You sell also painful, don't sell also painful. Right? So Thailand is going through this problem now. Fiscal imbalance. And as I said, this is not a repeat of 97 Asian financial crisis. And if it's not a repeat, it is a buying opportunity. Selected countries. Right? So those of you want to buy your villa in Bali or Phuket, it's time to go for scouting. But pay in local currency, don't pay in US dollars.
So
Okay?
you actually expect the taper to go through with the dollar to strength?
I would think the taper will go through. It's a question of when, not if. Right? The Fed can't keep on printing money forever. Technically, they can.
No, but America owes more money than any other country has ever owed in the history of humanity. The moment interest rates go up, isn't it actually going to end up having to pay more just to service its debt?
Theoretically, no. Theoretically, yes. But the calculations are, a lot of people not very not very sure the calculations. Now, how much debt does the US government has out there? I think it's something like 15 trillion. Do you know that 1.5 to 1.8 trillion of that is held by the Federal Reserve? So do you do intercompany knockoff? You owe the Fed owned by the government. Right? So the net position, I would think the net position is actually much lower than that. I don't foresee a problem. Right? If you talk about the most indebted nation is Japan, 200% debt to GDP. That's on the government debt alone. You add private debt in, it's probably about 350% debt to GDP ratio. And that is still functioning in a zombie sort of way.
No, you're right. You're talking about relative terms. I'm talking about absolute sum of money owed. The US has to be number one because the size of people.
Yes, but there are things turning around the US that lead me to believe, I think we had this theory about 6-7 months ago, the US dollar will be stronger. First of all, there are companies relocating back to the US because China is no longer cheap. And secondly, because of shale gas, anybody who's following shale gas, development. Shale gas is giving the US economy a boost because energy cost becomes very cheap. Shale gas is like $2 per MMBTU. Let's look at $2 lah. Internationally, it's selling at 8. So effectively, the US is actually importing less oil. Less oil means a better current account deficit, right? It may be a surplus in some years, in the future. When that happens, everybody will buy US dollars. And they can print whatever money they like because everybody will buy US dollars.
So in terms of current opportunities, based on what you said,
Mhm.
buy Indonesia, buy US, for different reasons.
Yeah, different reasons. Indonesia will be more opportunistic. You always like Indonesia, now you're getting it cheaper. US is for, I think, for the longer term. If Obama doesn't screw it up. How can Obama screw it up? He allows the companies to export and sell the gas in the international markets. Then the US is sunk. Instead of the local economy in the US enjoying the cheap energy, it's being exported and sold, and only your Chevron, Mobil, or Shell would earn the money, right? So it depends on politics. Politics play a lot in this.
Is there no middle ground where they sell some and keep some?
US is capitalistic. If you allow me to sell, I'll sell as much as I can, right? It's a question of how much or how expensive it is. If I need to build a pipeline, a 3 billion pipeline from here to here, but I can make it back in 1 year, I will. Right? All this thing comes and booms and busts. Like, when everybody starts building pipelines, it's time to sell. Because by the time they export, the price won't be 8 anymore. You're probably at 4. And it's uneconomical to sell. Then everybody loses, nobody wins. Except the pipeline maker. Okay. Now, why is it different now for Asia compared to Asian financial crisis? FX, this is during 1996, the red bar, in months of imports coverage and in reserve coverage. You can see, this is 2008, this is now. In all countries, the fiscal position is actually better. Now, what is saying the country has saved up over the last 16 months. But the last 2-3 years, you've been spending more than you are earning. Right? So, countries are starting to dip into their savings, and that's not a good thing. Dip into the savings to meet current lifestyle. Okay? So what are you going to do? Buy less handbags. The guys go to downgrade lah. Instead of buying a BM, we buy a Camry. Sorry, I'm not hitting on the ladies.
Sounds like.
Actually reminding myself, if I bought a couple of handbags, I'm still paying for it. So, this is what's happening. We have saved, we have a lot of assets, but what's important now is cash flow. Cash flow is important. And if you start to dip down into your savings to meet your current every month lifestyle, that's not a good thing. So you get to cut. That's why you cut in Malaysia. How do you cut? Raise fuel prices. So the government subsidizes less.
And give more to Brim.
I don't know how the equation works.
Or 30 billion to Bumi development.
So, I mean, on a net basis, they should be spending less, right? I think the hope is that the BRIM and the Bumi development generates spending, consumers from spending activity, and then more spending will lead to a positive cycle. But I'm not very hopeful because previous track records of BRIM or the handout spending has been very quick. Okay.
I had a bring installment now.
Sorry?
We split in 2 installment.
Two installment.
That's right.
Came out easy.
Double spike.
It's just more money going out. It's just trying to. Not everybody spends at the same time. Trying to phase out the spending. Okay. So we are not in a bad position, but we could do better. And most of Asia can withstand any contagion. You can look at Korea, which was the worst, one of the worst country hits in the 97 crisis to get Indonesia. All the positions have been improving, right? FX as a percentage, reserve percentage of GDP is higher. Short-term debt, external debt to FX reserves is 50% compared to 200% before. From Korea is down from 300% to 37%. So all these ratios are good. They can borrow money, right? The question is, do you need to borrow for the sake of borrowing? And what you use the borrowings for? Okay, if you use it for to do business, great. You use it to buy unproductive assets, it's not great. So, but the challenge now is people are looking at the declining pace of FX reserve accumulation. Now the pace of foreign reserve building up will be slower from here, right? So because countries are spending more, instead of exporting everything and the US run up all the deficits, now it's being more evenly spread out, which is better, which is also comes back to my title, Growing Pains. Okay. So China, well, what I can say is no one who invested in any China fund over the last 8 years has made any money. Is that a fair comment?
No, actually, I don't think it is. I've got clients now making money.
Now making money.
But it's a result of aggressively going in when no one else wanted to.
Yep.
But still very little.
Yeah, but if you invested from 8 years ago, the economy has gone up so much, everybody has lost
You have
money.
to average.
Right? Have to average down. You have to do active management. So China is also facing somewhat issues. Now you see current account to GDP is coming off. Ratio of foreign debt to reserves is actually coming off slowly. Ratio of foreign reserves to FX reserves is also coming off. Right? So they are also growing up. Okay? This is all part and parcel of growing up. So it's not bad for China. It's just that we got to think of China in a different way. Okay. And we have to cope with rising funding costs. China got to pay interest rates like everybody else in the world. And the GDP growth is lower. No longer is 10, 12%. Now looking at below 7. 7 or below. About there. Then again, you have this question whether the figures are actually accurate.
That's a big deal. If it's wrong, all bets are off.
Yeah. So how do we track whether the figures are correct or not? For us, we look at things very simple. If I don't know whether the data is correct, there's so many data from so many provinces. I just track the usage of electricity. If you're a manufacturing country, you manufacture, you need more electricity, right? If the electricity growth rate is flat or slightly low and you say you're growing at 7%, I think there's something's wrong with the data.
Energy efficiency.
Yes, I cannot be so efficient. Oh, a good spin, a good spin doctor.
No, I got the largest position in China. I invested interest.
You have to believe me. Committed believer. What happens is when interest rates go up, the pace of growth will go down. Right? Remember the first slide? Interest rates goes up in Asia, the growth will slow down. Now slowing down, is it a bad thing? I would not say it's a bad thing. I think you heard me again and again before. Slowing down is not a bad thing. Running too fast is bad. Okay? Now India has run too fast, has paid the price for it. Right? Brazil has run too fast and they paid the price for it. Okay?
China's smart.
China's smart, but you are prolonging the pain, but in a better way. They are addressing the structural issues. It's one of the benefits of what we call a command economy. Politburo sales, Russia is mafia.
Led by Putin.
Led by Putin, the biggest mafia. Any Russians here? No. But what we're saying is, after 4 years of partying because of cheap interest rates are going to go up because you don't have to go up. You go up not because of whatever, but normalization. There's no need for cheap interest rates anymore. Right? So we have party for 4 years. Now it's time to go back to work. Things will feel a bit slow. Things will feel takes more longer time to do. But we'll be back to the pace probably 04 to 06. Okay, you remember that kind of pace? Put in your mind that's the kind of pace of activity I should be expecting.
Normalized growth.
Normalized. What we're going through the last 4 years is normal. But people get used to it, it becomes the normal. Right? So, Malaysia. Current account to deficit is coming down. Current account to GDP ratio. At this rate, in 2 years' time, it'll be negative. Okay? And remember what I said in the previous chart on India? If it's not handled properly, it can go this way, and this is what happened to the rupee. This is not a rally in the rupee, okay? Don't be too excited. This happens if it's not addressed properly, we have issues. Okay? And this one, subsidy as a percentage of GDP. In 05-06, it was 1.7%. Now it's 6% subsidy of GDP. That's why your petrol prices will have to go up. Now it's also political, not only petrol prices, your rice, sugar, but all this, if you put all this in place, it just leads to opportunities for smuggling. Okay? Which in turn, you're not enriching, you're not subsidizing your own people, you're subsidizing the Thais and the Indonesians. Okay? To me, I've never quite believed in subsidies because subsidies does not give you revenue. Subsidies lowers your cost only. Do you want lower cost or higher revenue?
Higher revenue.
Precisely. For sure, higher revenue. You can tolerate higher cost, but you must be compensated by higher revenue. Okay? A cheaper cost doesn't necessarily bring. Now, for those of you as old as me, remember when China was all fully controlled, costs were cheap, right? But there's nothing to buy. Does low cost generate economic activity? No. So it must be managed cost. There is a certain amount of cost that needs to be done to be incurred if you start a business. Right? But if you don't do your work properly, you can generate the revenue. You want to do expansion, buy a new IT system, you must make sure it comes with higher revenue. And make sure it's not there as a white elephant. Okay? So subsidies will have to be addressed. Because subsidies does not generate growth.
What about GST? You see coming?
GST, yes, 2015. 2015. It's a question of when.
How's
Now-
the US trend?
Sorry?
How's the US trend?
2015. Now, is GST good? GST in the normal countries means that they'll tax you on consumption when you spend, which means that technically taxation rates, personal tax rates are supposed to come down.
Yes, hopefully.
I share the same view, hopefully. Right? But it's not a given. Now, even on tax rates, we are not competitive with Singapore. Singapore marginal tax is 20%. We're at 25. Thailand is at 20. They moved from 25 to 20 in 1 year. Right? They cut five.
Personal or?
Personal.
We're at 26.
We're 26, okay. So, tax-wise,
Corporate rate.
so to offset, normally if the same rate of GST implied, put in, let's say if it's 4%, should lead to a 4% cut in tax rates. Should, in theory. But that's only if the government can afford it. Okay? The government can make sure the revenue from the GST is more than what you lose from your personal income tax. Now, here's my biggest reason why I say it should be. GST will hit the lower and middle income people more because they don't even pay tax, right? You earn less than 3,500, you don't pay tax. But now, you go buy anything, you need to pay more, pay tax. So that is politically maybe not in line with what the government populist measures are. So I'm not that hopeful. It may be it may be just maybe 3% GST compared to what Singapore GST 6-7. Japan is 10, right? You go to Canada, it's 20%. You go to UK, 20%. But people get used to it, you know.
But it never comes down. Once you
Yes.
introduce GST, it just creeps up.
It just creeps up, yeah. Because the government is always in deficit, short of money. So that's my take on the subsidies and GST. And as always, we are confident of achieving the fiscal deficit target.
How?
Don't ask me, I'm not a government. That's a different, that's not my job grade. Way beyond my job grade. So, petrol prices increase. I think, put this way, we are complaining about the higher cost of petrol. It's true. But our petrol cost of petrol is still cheaper than Indonesia and Thailand. Right? That's why smuggling, people are buying our fuel to smuggle there. Right? And Indonesia, per capita cost of income is less than half of ours. So it's a question of getting out of that mentality. But it's not easy. Politically, it's unacceptable. Okay. So, yeah, I'm not definitely no issue because they decided no contest. Right, so now just going to wait for the budget. So hopefully my thinking is because the PM won't be challenged, you'll come up with a fiscally responsible budget. Better for the country, not great for us. Okay, less spending. So we're still expanding in a way, the country is still growing. But CPI is also going to grow up because of your petrol subsidies withdrawal. Okay.
In the year that GST is introduced, you will only have a one-time spike in the CPI, right?
It'll be something like this. Yeah,
And then it normalizes.
then it normalizes. This was the spike when RON 95 went from 120 to 170. Remember that? This was a spike. A big jump. Now we are used to what? Now it's what, 210? And nobody protests, right? Silence.
Boil the frogs slowly.
I would say resign to the fact it's going to go up. So the question is, as long as you can generate your revenue higher than your petrol increase in petrol bill, you're okay. Salary don't go up. Patrick, sell more. Commission don't. So if the rate of commission doesn't go up, you will generate higher volume.
So work harder.
Okay, that's a separate other discussion.
Nothing to do with him.
So we had a narrow escape. Because we suffered a very, very small deficit here, and it rebounded to be positive again. But as on the one-off, you can see the general trend is not great. So this is the where, or you've heard all this, Fitch is a negative outlook of Malaysia. This is the reason. The country is not is spending more, but like yourself, I'm expecting 10% more in revenue or in pay. Actually got a pay cut. But I'm committed to spend already. I spent my holidays already.
So
Yes.
is we hypothetically, or you just got a pay cut? I'm very sorry to hear that.
Hypothetically. Right? You know, you're committed to the cost. All your EPs, your civil servant pay hikes, all this is committed already. And that cost can only go up because you always have cost overruns. Right? You cannot manage projects on time, on cost. But your revenue is variable. Your costs are fixed.
True.
So,
Could you go back? Just a second.
I thought I'd take a picture of me. This looks better than me. How sad. How sad.
Okay, big smile.
So market review, I think last time I was here, you were showing all green here because all the markets in Asia were all positive. And now the thing is, it's all red.
Negative.
Most of it is red, negative.
All negative.
The only positive here is Japan
Horrible.
because the yen went down 20%. So everybody, that is strange. The yen went down 20%. You still make money because the stock market went down 50%. So this is the strange thing about our markets. KL Bursa, where is all the money made? Small cap.
Small cap.
Also means higher risk. Okay.
When will it come down?
When will it come down? Wow, that's a $1 billion question. I'll let you know after it comes down.
Going into the small mid caps. They announced it.
The question is, have I heard anything about DBF going to the small mid-cap space? If they do, it's a reversal of the policy they put in about 5 years ago. 5 years ago, they cleaned up the entire portfolio. I think the time they had half of all the companies in Bursa. They had about 500, invested in 500 companies in Bursa. You cannot track. So they cut it down to less than 200. If they're going back there now, it means that the reversal of that policy.
But
Maybe at the new boss,
that was about 6 weeks ago.
it may, I didn't quite follow that. But if it is, it's a reversal of that policy. Right? How much money can you make in small cap? Your fund is so huge now. EPF is like 500 billion ringgit. You practically own up the whole KLSE. So, currencies, everything negative. So the question of how negative you are. Right, ringgit, where's the ringgit? Here, okay, middle. Not the best, not the worst. Okay. So when I say that we are not as bad as, we are not paid, be thankful you're not paid in rupees. Not in rupiah. Or even the Aussie dollar is down 14% against the US dollar. Okay. This is on a year-to-date basis. Commodities, I can tell you the commodity story is over. Anybody try to sell your commodity funds now? Forget it. Yeah, forget it. You're better off buying Nestle. At least you don't lose money. Yes, cash flows, dividends, back to basics. You see, all the hard commodities, all negative. Soft commodities, mostly negative, except for CPO and soya. Okay. Yeah, soybean and CPO are very closely linked together. So, commodities, if the China story is dead, that's why Australia is also dragged down. A lot of countries dependent on commodities are suffering. Now, countries dependent on oil also are suffering. Nigeria, Venezuela. Even Nigeria had to go to China and ask them to beg them to buy Nigerian oil because the Americans are not buying. Why are Americans not buying? They're finding more energy from shale gas. So it's causing I will call it a long-term tectonic shift. Tectonic shift in the globe, in the way the world is being looked at. These big shifts. right? So if you extrapolate it, if the US becomes more and more efficient in energy, imagine if half the production the US, which is given to China, is taken back to the US. What does that mean for Asia? Big questions, right? And we cannot say we compete in terms of cost. To compete in terms of cost means you're going to cut your pay and my pay, right? So that's the only thing they can cut. You cannot cut imported raw materials. You cannot cut electricity. You only cut your pay and my pay with variable. So it's not a great story, but it also means growing up. You cannot depend on US or China. We're going to grow up ourselves. Growing pains. Instead of saying, Daddy, my allowance for this month. Daddy say, I'm going to cut half your allowance. You go up weekends and work at McDonald's. Flip some burgers, earn some money. Learn about life. Instead of just staying in a room and play Call of Duty every day. The only younger folks know what Call of Duty is. The older folks will be playing Sims. So, growing pains. There will still be opportunities if you work hard. It's just that free handouts will not be there as much. And the free handouts, I think all of us in this room won't qualify. Anybody here qualify for BRIM? None, right? I answered my own question. Valuations, how expensive are we? Now, we are cheap or we are expensive? Now, Malaysia is deemed expensive. Yeah, we are 14.5 compared to, say, Indonesia with better growth. Now, this is the growth rate of the companies in terms of profits. Indonesia is growing like almost 15% next year and the next 2 years. Right? Korea is growing about 20% and 10%. We are growing 10 and 10. So comparatively, we are deemed more expensive because our rate of growth is not as fast. And because our PEs are higher. So that's why but because of the two big brothers, PNB and EPF, our stock market did come down so much. It also means that there's also less room to move up. Right? There's no fire sale like Indonesia, 40% down. You can go in and go and pick up something. Because of this stabilization factor, EPF and PNB, not much opportunities for us. It also means that you don't lose so much. But we're here to make money, right? You don't mind taking risks, right? Especially there's not much avenue to take risks in Malaysia. So, I just like where all the brokers are forecasting the KLCI for 2013 is down. Some of them are revising down. CIMB, Hong Leong, Maybank, UOB Kay Hian are revising down the KLCI targets for the year. From 3 months ago was 1386, now it's 1816. UBS 1009. I like your eternal optimist. Pick up the number you want to believe in. I like your.
Yeah, salespeople,
Correct, salespeople. You pick the number. I'm sure you go out and say, hey, UBS is 1900. Why? So, the slowdown is happening. And the concern will be the current account. If you have tightened, which means that next year EPS growth may be slower. But it's better for the country. Your ringgit may not go to 360. If the current account deficit problem doesn't get addressed, we can go to 360 very fast. Okay, so which do you want? Of course, we want both lah. But we can only choose one. That's the problem. Okay. So, with that, our conclusions, party is over. The cheap money, because of the US monetary policy, the withdrawal of that money is a stimulus system. Markets are coming off. It's generated a lot of concerns. Countries which depend a lot on cheap external capital. It's like if you have set up a shop or a coffee shop to cater for all the contract workers of this big condominium. Condominium completed already. Workers move on, some go home. Your shop business will go down what? 60-70%. What are you going to do? Still stay at the same place? No, you're going to move for another opportunity, right? So this is what it means. Capital has gone, the business is gone, you look for other new avenues of growth. And twin deficits, this will be what the foreigners will be looking at, providing an excuse to sell your markets. And we're entering region environment of rising real funding costs and slowing GDP. This means is that your cost now will be back to normalized. So one way I would suggest you do is look at your portfolios or your mortgage or your personal financing situation. If BRR, from BRR -2, it goes to BRR, can you take it? Can you service the extra? If you cannot, then something has to give. Handbags will go up first. Cannot change car already. Have to sit in the same car for the next 3 years. It just means that you have to cut somewhere. Okay? And we do not expect a repeat of 97 crisis. But we will think that countries will decouple. Countries with high debt will probably move in one track. Countries with low debt will move higher. Right? Just like us, when you invest in companies, we will look for companies with low debt, high cash flows. We don't invest in companies in high debt, low cash flows. Same thing for countries, very simple. So Malaysia, we're still trading at a premium, although it's declined. We are trading at 31% premium to Asia Pacific. Now we're expensive. Now, as an investor, you want to ask, are we worth a premium? Okay. So, to contain the budget deficit, our house view is that government introduced GST in 2015. Subsidy rationalization will be there. Review of mega projects in the budget. This one I'm not so confident because all of it is committed. A lot of it is starting to build. And if you stop, you're going to get pay compensations and all that stuff. But what I hear is the MRT lines 2 and 3 maybe delayed. 1 will still go on. Okay. So it's a tip. You buy properties now. Look to buy properties where prices have not moved in those lines yet, or have moved too much. If you're expecting the line 2 to be built, you're buying around there. Prices are up 50%. Maybe it's time to sell first and buy back.
Tips.
So foreign shareholding is 24%. Lowest it was at 2007 at 20%. So we are deemed we won't go down much. If we have low foreign ownership and strong domestic institutional support, our two big brothers. But it just means that when times are bad, people will put money here because they don't lose as much money. But when times are good, they will move out to countries like Indonesia where they can make 20-30% more. Right? So looks like Malaysia is stuck where you be happy making 5, 8, or 9% per annum. Yes?
Based on everything you've said, if you had to take a 6-month to 12-month view, and you were allocating equities only in Malaysia, China, Indonesia, and the US, what do you think would be a fair split?
I have to charge you a fee for that.
Patrick?
I can up your fees, right? If I were to make the kind of allocation, well, first of all, I assume it's for pure investment portfolio. You don't have children doing education in other countries. I will put probably 30% in US, 20% in Indonesia. There'll be 40% in Malaysia and 10% in China. So that is the view of the world. It's not a great picture. Okay? It's not a great picture. What it means is that
Then in China.
we're back to 2004, 2006 type of scenario. But we are so used to the last 3-4 years where things seems to come more easy. It's going to be slower from now. Okay? So you are more prepared than, if you're more prepared than your competitor, I think you can do better. Any questions?
We can only take 3 questions at most because we're taking a break later in 5 minutes.
Okay,
Yeah.
3 questions. First question going for 50 ringgit.
Raymond, can you talk about your CM fund performance? Because on certain days, when you look at the fund prices, certain day your funds outperform the rest of the fund by quite a big margin. Why was it so?
Stock selection. We are not running the fund compared to KLCI, right? Because the objective of the fund is to make money. So at certain times, when we pick the stocks, it will be different from the rest of the market. I can tell you there's the fund manager is quite aggressive fund manager, meaning he's buying a higher percentage of portfolio in the smaller caps. But he's a great small cap manager. So that's where the risk is taking to generate the returns. That's why it's different than the market, right? So not buying things like Maybank, CIMB, Public India. It's not that type of fund. It's run as a, I would say, slightly moderate risk fund. But because all your investors just want to generate returns. Does that answer your question?
How about your overseas exposure? Do you expose to overseas stocks?
Overseas exposure will be tough because for a fund that size, it's sometimes uneconomical to trade overseas. The trading and settlement costs are very high compared to Malaysia. Say for example, you want to buy 1,000, let's say $10,000 in HSBC. I pay the same settlement cost to the overseas custodian. If I buy it with 10,000 or 10 million, it's the same cost of settling the contract. So the smaller the fund is, the higher fees you have to pay. So sometimes it may not be worthy if I trade too aggressively in the fund, which this fund is designed to do. There was
We have
2
the last
questions already.
question? Yeah. Oh, we have to take a bit. We only have one.
You decide.
Okay, Mr. Nade.
Since last night, I've been monitoring Financial Times and also the start today. They say that market is going down because of the threat of the possibility US government shutdown.
Oh, the US government shutdown.
Yeah, what is it?
It just means they cannot agree to fund the deficit by issuing more money, by issuing bonds or whatever, so that the civil servants can be paid. It just means that if they don't agree, none of the government employees will be paid next month. Do you think you will? Yeah, a drama queen on you. You said it right. Okay, the market was down like 0.7% last night, right? It was really going to shut down.
The market crash.
Precisely. It will be 40%, 50%.
But then it seems that even though the fund manager also know that the US government won't be shut down, but why the fund manager react like panic?
Opportunists.
This is opportunity.
There will be some fund managers out there shorting the market and telling you it's going to go down.
Correct.
So you panic, you sell. He goes down, he cover his shorts, he make money. Yeah. All drama saja. Any other?
Thank you, Mr. Raymond. Ladies and gentlemen, we'll now take a 15 minutes break. So we'll see you back at 2:30.
Thank you very much, everybody.